Hello everybody, this is Toni Turner and welcome to the market now as of Friday, September 27th, just a few minutes before the markets close. Well, U.S. stocks fell today after news that the Trump administration was considering delisting Chinese companies from U.S. stock exchanges and limiting U.S. investments in China. The S&P technology sector dropped almost 2%, and U.S. listed shares of Chinese equities Alibaba, Baidu, and JD.com were sharply lower. High-level trade talks between Washington and Beijing are scheduled for next month before the start of the third quarter earnings season. So this is all going to be very interesting in the next week or so. Now let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our S&P 500 benchmark index. Now, when I captured this chart today, a couple of minutes before the close, the SPY was trading at $294.56. That would be about $29.45 on the S&P 500 itself. And as you can see here, the green line, the 50-day simple moving average, is coming in at $294.67. So the SPY is just a few cents below the 50-day moving average. And we like to use that 50-day moving average as kind of an intermediate term trend line. So it's kind of an important one, and it's always more bullish for the market when the S&P trades above the 50-day moving average. At any rate, if we look, we were hoping this past week that the SPY would climb back up above its all-time highs at 302 or about 30.20 on the S&P 500 itself. However, that did not happen, and as you can see here, the SPY did move lower, now sitting just a few cents below its 50-day moving average. Now, if the SPY needs it, we do have more price support coming in at 288. Of course, we have this trend line, this lower trend line coming in here also at 288. We also have more price support coming in here at about 284, and right where the 200-day moving average is coming in at about 283. So quite a bit of potential support here should the SPY come lower, and should buyers say, okay, we will come in and support it. And buy it and maybe send it higher. But for right now, the SPY is certainly unhappy also, or not terribly, but slightly. We do have support here at 290, which would be 2,900. I didn't mention that on the S&P 500 itself. So a lot going on here should the SPY continue to fall next week. Please do keep an eye on it. Now, please know that if the administration decides not to do this delisting Chinese companies and limiting U.S. investments, then the market could rally, certainly before third quarter earnings season. So next week should be interesting. Please keep your protective stops in place and stay tuned. And remember, sometimes the most effective strategy is to do what I like to do sometimes, called keep your mittens off the keyboard. Okay, our next chart today we're going to look at is the Invesco QQQ ETF, symbol QQQ. As you all know, this represents the NASDAQ 100, a very important index in the market. Top 5 holdings are Apple, Microsoft, Amazon, Facebook, and Alphabet. And together they represent about 43% of the fund's holdings. Now, of course, if the administration put this situation into effect that I'm just talking about, it would certainly affect a lot of technology companies. So that's why one reason we saw the drop today in the QQQ, which is, I just said, all of the big tech companies. That's where they live. And so we can see that the QQQ today, when I captured this chart, is trading at $186.57. It has sunk now below its 50-day moving average and is sitting on its rising short-term trend line here at $186.57. Now, it too made an all-time closing high on July 26th at $195.29. In this case, we were, of course, fingers crossed this week that the Qs would come back up and move above, but that was not to be the case. So we're sitting now again on this rising trend line below the 50-day moving average. And next support down comes in at about 182, 183. And then the 200-day moving average is coming in here at $179.53. So a lot of potential support here should buyers decide to step in and hold the Qs up in the coming week. Is really just going to matter. Geopolitics, I think, is going to play a lot to do with what happens in the market next week. So again, please keep your protective stops in place, and please be very careful. Our final chart today, I like to, when I probably told you this before, when the market's going a little crazy and getting a little cranky and ornery, I like to go somewhere where nobody else is. And get out of the spotlight, get out of the equity shares that trade in the spotlight. So I wandered around today until I found iShares Global Timber and Forestry ETF. Symbol is WOOD, as one can imagine it might be. And if you look, well, let me tell you first, the top components in this particular ETF are Weyerhaeuser, Ryoneer, PotlatchDeltic, WestRock, West Fraser Timber. Now this ETF has exposure to companies that produce forest products, agricultural products, and paper and packaging products, and it's targeted to access to timber and forestry stocks from around the world. So this is kind of a place we haven't been before. Again, it's out of the spotlight. It's been sort of making a bottoming pattern here that I've been watching. Now you can't see it on this chart because this goes back just to January of 2019. But if you pull up a bigger chart, you'll see that the WOOD had an all-time high of $83.88 in June of 2018. Now its high this year, you see right here, was in February at $66.57. Then it dipped finally. It kind of consolidated for a little while, made a slightly lower high, then dipped down to the May lows here at $54.33. Ran up for a little while in June and July, then made a real shallow, maybe you can see it here, real shallow little tiny head and shoulders on that move up, which broke down, and then price came down to August lows at about $53. So whenever I'm going into what I would think of in this case too as a bottom fishing play, I look on a longer term chart. That's where I found the all-time high I told you about, and I did want to make sure that there is support beneath a price that I may get into an ETF or a stock, and I look for longer term price support, and I did find it in this case, so that's why I'm keeping an eye on WOOD. Now, if the market remains reasonably positive in the coming week, and we see here that excuse me, wood is trading above its 50-day moving average, which is coming in at $56.45. We know that today, as I'm talking, it's trading at $58.32. We also know that there's resistance up here at about the $60 line with the 200-day moving average coming in overhead. That could be a bit prickly, so if in the coming week the market is positive at all and wood shows any signs of starting back up toward its 200-day moving average, I might buy a small position if it starts to look positive, and then I'll wait to see if it can move above the 200-day moving average, again coming in now at $60.27. If it can close above the 200-day, then I would add to my position. If, however, it decides to fall back here, I'm going to put an initial protective stop in at $55.90, just a little ways below the 50-day moving average. So again, of course, that would take that out. And there isn't a lot of, there's not a tremendous amount of volume in WOOD, although it's reasonably orderly, which I demand of all my anything I get into. So the orderliness can have me forgive the fact that it doesn't have much volume in it. So if it continues up and continues higher, I'll tighten up my stop into a trailing stop. You may want to keep an eye on WOOD in the coming week. And now let's go on to our economic reports. But first, please join us this coming Monday for our next session of Toni's Market Club. If you're not sure how you can make money in the market right now, let us help. During our session, we talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. If you can't attend the live session, there's no problem. The recording is available to all of our members just a few minutes after the session ends. This is a low-priced, high-value opportunity to learn how to trade more successfully and make more money. So please join us. For more information, go to the link on this screen or click on the button below. And now for the upcoming week's economic reports. On Monday, we have the Chicago PMI, or Purchasing Managers Index. On Tuesday, we have the monthly, very important ISM Manufacturing Index, that's Institute of Supply Management. That's important. On Wednesday, we have the ADP employment change and our usual crude inventories. Thursday, we have our usual jobless claims, the ISM non-manufacturing index, and our usual natural gas inventories. On Friday, we will have our monthly payrolls report with the unemployment rate. That will be important, so we'll stay tuned for that. Again, please join us for Toni's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. For more information, just click on the button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.